today, Ethereum still has the most assets, the most stable coins. It's got more margin assets on it than any other chain. And so by removing the need to bridge off Ethereum and allowing people to just deposit margin into a contract that is running on the L1, we think that it'll be far easier to attract liquidity and far easier to attract traders.
Hi, everyone. Welcome to Unchained, your no-hype resource for all things crypto. I'm your host, Laura Shin. Binance is the world's #1 crypto exchange, trusted by over 290 million users. With industry-leading liquidity, security, and a wide range of digital asset products, Binance is the place to buy, sell, trade, and earn crypto. Download Binance today to get started. Today's guest is Kain Warwick, founder of Infinex and Synthetix. Welcome, Kain.
Hey, Laura. Good to be back.
So you are joining the PerpDex party. You're about to launch Perp DEX on Ethereum, as if we don't have enough of them already. Not that I'm saying we have too many. I'm just kidding. So explain why you've decided to launch a Perp DEX on Ethereum.
The goal of Synthetix from maybe 2019 was to build derivatives. And perps at the time, that Synthetix originally launched were dominated by BitMEX. All of the exchanges started supporting perps over the course of that cycle. And we launched alongside DYDX one of the first perp dexes. And the challenge of building a perp dex was huge, I would say, right? And one of the things that we had to do was to move to an L2. So we moved to Optimism to be able to support the perp dex. But now we're coming back to Ethereum, and there's a long story there. So we've been building perp dexes for 6 years. This is our 4th version. And I think that we have finally put all the pieces together to build something that's going to be very competitive.
So talk about when you say that there's a long story there. Explain kind of the trajectory and why you decided to come back now.
So in 2019, I saw the first demo, the Unipig demo, which was Uniswap and Optimism. And that was around the time when congestion was first becoming an issue on L1. And so we looked at that and said, okay, this is only going to get worse when the L1 cannot keep up with the demand that is there for block space. And so optimistic rollups were the solution that I think the Ethereum community rallied around. I did at the time have some concerns about fragmentation. And so I pushed really hard for the Ethereum community to kind of rally around a single L2, which was Optimism at the time. Unfortunately, it didn't go that way, and we ended up with 100 L2s, or at this point, it's probably 1,000. But in that period of time when we moved to the L2 to allow us to scale because we needed that, we learned a lot. The L1 also got a lot better. Ethereum L1 is not the same chain it was in 2019. It is a much better chain. It has much more block space. It's more performant. There are a lot of advantages to the L1 today. And we also learned a lot about how to kind of build hybrid infrastructure off-chain and on-chain. And so I think that, it's the perfect time to come back to Ethereum. Ethereum needs a canonical perp dex in the same way that every centralized exchange needs perps. Even Coinbase is launching perps. I think every chain needs a perp dex, and Ethereum today doesn't actually have a perp dex on L1.
Okay. And, so you had your comments targeted to Synthetix, but would you say they also apply to DYDX or GMX and other previous, perp dex incarnations on Ethereum?
Yeah. So, DYDX moved to Cosmos. They moved around a few different times. It was Starkware at first. So, DYDX was on Starkware and then Starknet, and then they moved to Cosmos. And I think the lesson from almost every perp dex is that it is very challenging to attract liquidity if you're on an L2 or a side chain or something like that. Probably the only perp dex that it's actually pulled this off is Hyperliquid, and they're an L1. And so the combination of an L1 and a perp dex is clearly the right combination of kind of features. So the big question is that we asked ourselves, last year was, could we build a perp dex on Ethereum mainnet? Could we give Ethereum L1 a perp dex, like a canonical perp dex? And we eventually kind of answered the question and said, yes, we think we can. And so we're about to roll it out and see how it goes.
So please explain how you plan to do this on a chain that has 12-second block times. Because
Yeah,
that's like obviously the first question.
the first question is like, how could you do this, right? And the solution, interestingly, partially comes from what we learned from rollups. This idea of running a lot of transactions much faster, much faster finality on an L2, but settling to the L1. And so what we're effectively building, and this is going to take time and will probably be rolled out in stages, is like an optimistic order book, if you want to think about it like that. So the order book itself, the order matching engine runs off chain, but all of the orders are batched and settled onto Ethereum. And the important aspect of that means that there is no need to bridge your assets off Ethereum. And today, Ethereum still has the most assets, the most stable coins. It's got more margin assets on it than any other chain. And so by removing the need to bridge off Ethereum and allowing people to just deposit margin into a contract that is running on the L1, we think that it'll be far easier to attract liquidity and far easier to attract traders.
Okay, so I understand that bit about just like having this whole bunch of different assets. But what I still don't really understand. So you guys, is it that you have like a centralized company that's settling on Ethereum, or because you're not saying, like if you look at like a lighter or whatever, like their whole thing is like, oh, okay, we batch these ZK proofs, we put them on Ethereum, but yours just seems more like, is it a centralized company? But I don't fully understand how it works.
Yeah, so the off-chain order matching system is a centralized service that's running, right? And so there is like this trade-off of you can't run it fully on-chain, so it can't be fully permissionless, but the margin and liquidation engines and all of the core infrastructure run on-chain. So it's
is it just like an L2 with a centralized sequencer? Is that what that is? Or
it's not quite there yet, but that is eventually where we will kind of take it to turn the order book almost into its own sequencer, its own L2, and then it will settle on Ethereum. But for now, like most L2s, the order matching engine will be centralized.
okay, and then like what kind of speeds is it? Like if you were to, so because we have some other perp dexes that we can compare it to, like how would you compare it in terms of speed? Because the marketing materials I was sent was saying like high speed and all that, but just how would you compare it to like a hyperliquid or a lighter or edgex or really any number of the other ones?
All of the
Yeah,
dexes.
Aster.
Yeah, I mean the goal of the matching engine is to be as fast as possible, obviously, right? And I think the key design constraint that we're making is to keep the margin on chain, which is going to be slower. So there will be a period of time where a trade has settled off chain, but not yet been pushed on chain. And so there's definitely some trade-offs here. But in terms of how fast can you make the matching engine, by keeping the matching engine off chain, you can make it as fast as you can make a matching engine using current technology. So there's a bunch of improvements that we can make. At the moment, our goal is to make the right set of trade-offs so that we can match orders as quickly as possible. So we're trying to keep things sub 50 milliseconds in terms of order matching, and then settle onto the L1 as quickly as possible. But as you pointed out, there'll be a 10-second delay between settling an order and it actually hitting the chain. So there's going to be some dialing in of different parameters to kind of get this right. But we're really confident that the key insight is that the order matching is what people care about. They want their orders matched as quickly as possible. Once an order is matched, if there's sufficient margin for a user to then be able to kind of keep the trade open and monitor the trade, they don't really care about that part of the kind of trading engine as much, the margin side. It's really about making sure their order gets filled as quickly as possible.
Okay. And then one other piece I just want to make sure I understand is, so everything still remains on chain. So we'll end up getting the same transparency that we get now, like, the way that we could all see what happened on Black Friday and Hyperliquid. Is that what this setup is going to be?
So yes and no. So the one difference is standing orders will not be exposed. So you won't be able to see what standing limit orders people have, except if it's in the book, right? So you'll only be able to see orders that are coming through the book. So you won't necessarily be able to match up in the way that you can with Hyperliquid because it is fully on chain. Every single person's order with liquidation prices, etc. So that, for what it's worth, we think is a feature and not a bug. There's obviously arguments on both sides about like fully transparent or having some opacity to the order book and liquidations, etc. We will see what traders think. As a trader myself, I personally have a preference, which is for people to not be able to hunt my stops. But we'll see in aggregate. An exchange is a complex dynamic system, right? And so it's hard to necessarily say from first principles how people will react to different sets of trade-offs. One of the things that we're doing, though, at pre-launch, which will help us to kind of dial in some of these trade-offs, is running a very large trading competition with some of the top traders in the space, so we can get feedback for 30 days on what the current design constraints are and the parameterization we've made and choices we've made. And so I fully expect we'll get some feedback from those traders that will require us to make some changes and modify things to ensure we get the best experience.
Okay, yeah, this is so interesting. I mean, my immediate reaction is that the privacy aspect will be appealing to people. But then, so in the competition, is it like the results are just you guys are posting them like with
Exactly.
Okay,
yeah.
Got it.
Yeah. So right. The idea is it's supposed to be entertainment, right? I'll be participating in the trading competition as well. So when I get liquidated, I fully expect that there will be tweets from Synthetix main saying that I've been liquidated. So it will be it'll be kind of a spectator sport during the competition in a way that the main exchange won't necessarily be. Obviously, people have the choice to publish their trades, and we'll have shareables and all that sort of stuff. We'll probably even have a leaderboard, but it'll be up to each trader to decide whether or not they link their identity with their trades, etc.
Okay, yeah, and for people who haven't heard about this, you've gotten some big names to agree to do this: Ansem, Gainsey, Degen Spartan, who's coming back from wherever they were. Who knows?
North Korea. They were in North Korea. That's where they're coming back.
Okay.
We got them a visa.
Oh, great. Evgeny, there are others. So that personally sounds fun to me. All right. So one other thing that I'm wondering about is, here we've just talked about kind of like some of the hurdles to running this kind of thing on Ethereum. So like, why is it so important to you to choose Ethereum despite things like the slow block times and all that?
Yeah, I think that's a very important question. So as one of the people, and I've been saying this for a little while, as one of the people who push really hard for Ethereum to make what I would say were the pragmatic choices for scaling back in 2019, 2020, 2021, I think the unintended consequences of that have been both good and bad. The fragmentation of L2s, particularly when it comes to uncertainty of like which asset a potential investor should buy, right? The proliferation of L2 tokens changed the dynamic, I think, for investors where it wasn't as obvious that they should just buy ETH. And in fact, there were a lot of people in various communities who said, almost don't buy ETH, buy my token, my L2 token, because we're the future sort of thing. And I think that created a lot of uncertainty and was one of the major unintended consequences and had a significant impact on ETH, the asset, right? The positive unintended consequences were that we ended up with a lot more block space than I think anyone expected we would have. And the ability to post transactions from L2s to the L1 extremely cheaply. Now, there's also some trade-offs there. Base is extremely profitable, as one example, right? And there's people, including myself, who say, Ethereum should probably charge more for block space than it does. But at the moment, I think it's worth Ethereum kind of subsidizing the block space of L2s because that's where a lot of the activity is happening. But if you can bring all of that activity back to the L1 and build an app that is fully on L1 in terms of the assets themselves are on the L1, not bridged off to an L2, I think that right now, today, is the optimal response to other L1s, whether it's Hyperliquid or Solana or Sui or Aptos. From an Ethereum perspective, putting my Ethereum hat on, bringing all of the DeFi that drifted off into different L2s, whether it's Aave or Uniswap or whatever, bringing all of that back to mainnet and running it efficiently on mainnet, I think is the optimal thing for reassuring everyone that Ethereum L1 is still the best place to build DeFi, which I personally still believe it is.
This is so interesting. And it's especially interesting to have this conversation now because obviously you made that decision to move back to Ethereum, however many months ago. And then we just had Black Friday. And I kind of thought that it might have changed the calculus for you, but maybe I'm wrong. I did see your tweet thread, which we'll get to in a moment. But the reason why I'm asking this is because I don't know if you saw. So the price of ETH dislocated the most on Ethereum mainnet itself. Like it fell further on Ethereum L1. It stayed down there for longer than on Base, on Arbitrum, even on centralized exchanges like Binance or Coinbase. So I don't know, would that affect, something like, your new perp dex, or like, how would that factor in?
Yeah, so I think the main impact that you would have would be margin. The margin engine being on L1, being a contract that runs on Ethereum mainnet, would create potential issues for people either depositing or withdrawing margin, moving margin, etc. If gas prices spike and it is very expensive to deposit margin. We have some ideas and solutions for that we think could be viable, which is, the simplest one is allow people to have another place where they can deposit margin. So, either an L2 or something like that, where the matching engine will look at both of those places. So, during times of high congestion, if someone, there is an obvious solution, which everyone hates, which is if it is critical to you, you can pay, to get a transaction to land, right? On Ethereum, it just might be very expensive. Obviously, that's not ideal for someone who has $500 of margin. But our view is, I think, that at least initially, the goal is to attract large traders with large margin positions. And if you talk to traders, whether they're institutional traders or large personal traders trading their own book, the thing that I think is the most concerning for almost every trader is counterparty risk. The risk of putting your assets on a centralized exchange or through a bridge or something like that. And I think all things being equal, most people are more confident leaving their assets on an L1 like Solana or Ethereum than bridging them somewhere else. And so, we have to dial in exactly who that set of trade-offs is for. And my expectation is that at least initially, it's going to be for traders who have larger positions, larger margin, and we're going to work really hard to attract the liquidity to support those kinds of traders. But we do need to be able to handle congestion when it happens, because it will inevitably happen. And so, one of the kind of areas of research we're working on is how to have some escape hatch for people to either move margin off in times of congestion or add more margin that doesn't require depositing straight onto L1.
Yeah, because essentially with the fact that Ether dropped, more on, mainnet than elsewhere, it basically kind of recreates that same scenario that happened on Binance, where those three assets, the prices dropped. And so basically more people would be liquidated.
Yeah.
So that's why, yeah.
I think the challenge, on any trading venue, right, is if you're an island and you get cut off from everywhere else, bad things happen. Prices dislocate. It's really dangerous. Given, in TradFi, this is not as much of an issue. Like, it does happen, but trading venues are so winner take all in TradFi, where there's one place where all the liquidity is, and provided that venue is still running, whether it's CME or NASDAQ or whatever, it's kind of fine. Like, the assets only trade in that one place, and they've got all kinds of infrastructure to ensure that trades are kind of happening continuously. Crypto's weird because we have 100 pockets of liquidity that are spread across different places, and if one of those pockets of liquidity stops talking to the other ones, then bad things happen.
Yeah. Well, so the other thing, of course, that I need to ask is, because we are in this situation where there are just so many perp dexes all of a sudden. How do you plan for Synthetix to compete? Because it's not even just that there's a bunch on, or not a bunch, but we already Lighter and EdgeX are on Ethereum. I'm sure there are others, but then even beyond, on all these other chains. So how do you plan to take some market share?
Yeah, I think there's two things in crypto that you need to be able to do in order to take market share, or in order to even be viable. You need to have the best product, and you need to build the best product for, in the case of a perp dex, the best product for traders. And I think one of the things that Synthetix has a very good history of is being incredibly trader friendly. We've always built our perp dexes to be as efficient for the trader as possible. I think the meta kind of changed probably with GMX, where it became almost more important that the token of the project went up than that traders had a good experience. And there's a tension here, right? And I've talked about this a lot. Synthetix, we have always understood, and SNX holders have always understood, that if you lose the traders, then you have nothing. There's no token, right? Like, you have to support traders. You have to make sure traders are confident in the platform that you're building. So I think that we have a good history of that. Historically, we've been very supportive of traders. We've had very good trader experience, and we've done a lot of work there. That's kind of table stakes. The next thing is, you have to have the ability to attract attention. If you can't attract attention, you can't attract liquidity, you can't get that flywheel going. And look, I've been doing this for a long time, and I know how to attract attention in crypto. With a good product, I feel really confident that we can, and this is also part of the trading competition, right? We've got some of the most entertaining people in crypto for various reasons, whether they're good traders, bad traders, non-traders, just, funny people on the timeline. So I think for the next 30 days, we're going to have a lot of attention on this new exchange, because it's going to be all over the timeline. And so, those are the kind of the two elements: being able to attract attention, being able to, get people to pay attention to the thing that you're doing. Build it and they will come has never worked in crypto, and it works even less today than it ever has. Which isn't to say that you don't have to build a good product. You have to build the best product, but you can't just build the best product and sit there waiting for people to show up. It doesn't work.
Yeah, and I also wanted to ask you to explain more when you talked about how, you're prioritizing traders, because you had this tweet thread about how the events of Black Friday kind of reinforced, why it is that you made certain design decisions. And, like one interesting piece of it was you had sort of the priority list for like how liquidations would go. So just talk, about like your thoughts on your design and like in relation to what happened on Black Friday.
Yeah, I think at the end of the day, success is dangerous when it comes to building a perp dex, and Synthetix has seen this as well, right? One of our most even before the perp dex, right? One of our most successful things was our spot derivatives. We had all these spot derivatives, and there were multiple instances where the size of the derivative versus, let's say the market cap of the underlying asset got big enough that it became profitable for people to try and manipulate the underlying asset. This is, again, before perp dexes at all, right? This is just spot derivatives. And so I think that we have a pretty good sense of how to put the right guardrails in place to ensure that we don't have a situation where the exchange goes insolvent. Like, that's the key thing. You want to be able to keep trading. You want to be able to ensure that the exchange doesn't become insolvent. So there needs to be layers to that. But the bigger a perp dex or any trading venue gets, the more open interest there is, the higher the risk, right? Because you have to have something that's going to backstop it. And so, our view is that you have to have some relief valve, which is obviously going to be ADL at some point. If markets move so quickly that the exchange can't respond and liquidity gets fragmented, or prices dislocate, or there's some huge event. So it's not to say that ADL is wrong. Like at some point you need ADL. It's just you need to dial in the parameters of when do you use that, and it should really be as a last resort. And I think that particularly in the case of Synthetix and SNX stakers and all of the people who are who understand what it looks like to build a trading venue, we understand that it is critical that we build with this new exchange the trust of traders. If you lose the trust of traders, it's really hard to get it back. And there's a lot of different things that can cause traders to lose trust in you. Not getting paid the profits that they believe they deserve is probably the highest as a trader, right? You're like, no, I did the thing and I didn't get paid for it. So it's really critical that we have, as I said, the right kind of waterfall of like ownership of trades from the individual trader down to some kind of vault like system which we've built, and then eventually you get to ADL, and then eventually you get to backstop of token holders or something like that if things are really bad, but the break points between them are critical to choose, right? Like you could have an exchange which just ADLs everyone, the instant prices move by more than like 3% or something, right? But no one would trade there because they would never feel confident that they could actually profit if what you want as a perp trader is big moves. You don't want to as soon as the price moves 1%, it's like, all right, guys, sorry, that's it. That's your maximum gain. So.
All right. So in a moment, we're going to learn more about plans for this perp dex. But first, we'll take a quick word from the sponsors who make this show possible. Binance is the world's #1 crypto exchange, trusted by over 290 million users globally. With world-class liquidity, security, and a wide portfolio of digital asset products, Binance makes crypto easy for everyone. Whether you're new to crypto or a professional, Binance offers a simple user experience. Learn with Binance Academy, browse hundreds of tokens, and track your portfolio on an easy-to-use dashboard. For experienced users, Binance Pro provides industry-leading services and bespoke trading products. With some of the lowest fees and deepest liquidity in the market, it's no wonder over 290 million users choose Binance for everything crypto. Buy, sell, trade, earn, live crypto. Download Binance today and begin your journey into the future of finance. Disclaimer: Binance is not available in certain countries, including the US. Check its terms for more information. Binance.com/en/terms. One thing I wanted to ask was earlier when we were talking about how it's starting more centralized, you said something about you would want to move it to something more decentralized. But then if that were the case, wouldn't it go on chain and then wouldn't the privacy aspect be lost or no?
I think you would still be able to run an off-chain order book that was not centralized, but that was opaque. Like there is a design space
Oh, right.
where you can do that. Whether it's like zero knowledge proofs or running it inside of some cryptographic computation system or something like that. We don't we don't think that that's worth doing yet. One of the things that Synthetix always did well when I was running it, which it kind of lost sight of, unfortunately, in the period where I wasn't running it, was that trying to design a perfect system in a vacuum, what I call like building a palace in the sky, right? Like we're going to build the most beautiful thing and it's going to be amazing. We're going to go and lock ourselves in a room for 3 years and build this incredible thing. And then everyone's going to come and love it straight away. That's not how products work. You need iteration. And so what we've tried to do is make the right decisions to get the core framework in place. And then based on the feedback and empirical evidence we get from users and seeing how the exchange is used and see, where are the places where we could improve efficiency or, make the UX better, we can iterate on that. And that will kind of dictate where we put our resources. So the last year has been about putting the right framework in place to run a perp dex on Ethereum. Once we decided to do that, we're like, let's do the optimal thing to get a framework in place so you could actually run a perp dex on Ethereum. Once we've got that running and we see how people use it, then we can lean into, okay, what are the concerns? It may be that no one cares about a centralized order matching system. And they're like, this is actually great. We love it. It would be crazy to invest, 9 months of resources trying to solve that problem if that isn't a problem people care about.
Okay. Interesting. One other thing that you wrote about, I think, in one of your blog posts was that you projected that perpetuals will partly cannibalize the business of lending protocols since people can get more exposure with less margin. And then at the same time, to me, it feels like part of the reason that you're building on Ethereum is partly to, power up DeFi on Ethereum. And so in your blog post, you said, quote, without mainnet perps, Ethereum has been running a financial system where you can lend, borrow, and trade, but not efficiently hedge. So I was curious, when you launch this, how do you think DeFi on Ethereum will change?
I think that's a very good question. We seeded all of the derivatives volume that Ethereum could have captured from, call it 2021 to today, right? 4 years of derivatives volume, which, is trillions of dollars, right? To other L1s, L2s, et cetera. And, there's no question that having perpetual futures creates, opportunities for other areas of DeFi. And so I think bringing that back to mainnet and allowing for people to whether it's hedging or whether it's directional exposure or whatever it is that they're doing, it will be net beneficial for the rest of DeFi on Ethereum. Because the fragmentation of we've got Aave on Ethereum, and that's the place where everyone borrows, and there's this amazing margin system that you can use, and even things like Pendle, where you can split out yield. There's all of this amazing infrastructure that has been built on Ethereum, but then all the derivatives volume is somewhere else and requires bridging and friction and all of these things. So my view is that the more efficient a market is in a single venue, and if you want to call Ethereum L1 a venue, the better it is for everyone on that venue, the more efficient the market is. And so not having perps of any kind on Ethereum mainnet has definitely been net negative for Ethereum. And I think bringing it back is going to be a net positive.
All right. So, last couple design choices I want to ask you about. I
Sure.
noticed you talked about how USDT will be a base settlement asset. I think USDC is more popular in DeFi, so I was just curious about that choice.
Well, I mean, this is another funny story, right? A funny OG story. So back in the day, Synthetix has its own stablecoin. It's a purely decentralized stablecoin, not crypto collateralized. It's not algorithmic, but it's not RWA collateralized, right? It's crypto collateralized, not RWA collateralized. So it's purely on chain. That's good and bad. And we've been suffering through this. We had a large depeg earlier in the year, which we've now fixed during this transition. But it was one of the big concerns, I think, for almost anyone who was interested in Synthetix was, can this stablecoin actually scale, et cetera? And it turns out it was very hard to scale it. Same issues that Maker had, where they made a decision to move towards RWAs as the primary collateral. But back in the day, we used to use DAI before it became, powered by USDC, right? And when USDC was added as collateral, Synthetix said, "Sorry, we're out. We won't touch DAI anymore. It's too centralized." Because we were crazy ideologues, right? And we're like, it has to be purely decentralized or nothing, right? And I think that like lack of pragmatism definitely hurt Synthetix. There was an audience for that back in DeFi summer, and I think that audience remained very niche. And so injecting a bit more pragmatism has been the right approach. Now, when we were making a decision about what the underlying collateral that denominates the exchange should be, and they proposed to me that it would be Tether. There was a Ethereum OG maxi decentralization maxi. I was like, I don't know about this, guys, but they were the engineers were able to convince me and that, like, especially on Ethereum mainnet, given how much USDT there is, it is the best possible asset you can use. And if you're, again, optimizing for the trader experience, then you have to choose that. Now, that's not to say we won't have other collateral assets, other margin assets that you can use. We will have multi-collateral, but the actual exchange engine is denominated in USDT.
Interesting.
I know. So I used to walk around in a T-shirt back in like 2018 that said "Tether is a crypto abomination," and yet here we are, right? So pragmatism wins in the end.
Yeah. Well, we all get humbled with, like we have a take at one time and we later realize we're way wrong. So,
Yeah.
um,
Many such cases.
me too. I also noticed, so you were listing 5 premium collateral types: USDT, SUSDE, CBBTC, wrap teeth, and wrap stake teeth. I actually don't know what that means, premium collateral. So just explain that.
Yeah, I mean, I think from an Ethereum perspective, it's a question of like, what are the assets with the most liquidity on Ethereum mainnet, right? What are the assets that we can be very confident can be easily liquidated, can easily be absorbed into a margin engine, have wide adoption across the L1. And if you look at those assets, I think there's a very good case for all of them. But you'll notice like CBBTC is a centralized wrapper Bitcoin that Coinbase custodies. But I also use Coinbase custody. So like, again, as a trader, my view would be, if you're going to choose a centralized custodian for your Bitcoin, it's hard to go past Coinbase. I think that's probably one of the best choices you could make. And so CBBTC, it just is the obvious choice as a wrapped version of Bitcoin.
Okay, but premium collateral means what? Like there's like certain benefits for using those types of collateral, or?
I think we're just saying like those are the primary collateral assets that we will support. If we add other versions of collateral, they will probably have different parameters in terms of how much you can borrow against them, how much margin you get, et cetera. So, but I think in the initial instance that it will be rolling out with stable coins, and then we'll add wrapped Bitcoin, and then we'll slowly expand the collateral options. I don't know if we'll get to the point where, you can margin a position with, I don't know, to pick a random token like Uni or something like that. But we're not ruling it out.
Okay. So let's switch gears. You also recently wrote about your super app thesis. Talk about the thesis. I found this super interesting, and I think it also ties into your plan for Infinex. So, you can present both together.
Yeah, it is pretty wild to me that I'm running two startups simultaneously. Like that was not on my bingo card in 2023. My goal was to run zero startups at the start of that year. But I think the emerging DEX narrative, right? Perp DEX narrative has become such a dominant theme in crypto that we for my own personal kind of satisfaction, I had no choice but to put as much energy as possible into getting Synthetix there. I always found it dissatisfying that Synthetix had created so many novel things, over the 8 years that it existed, from binary options to spot derivatives, inverse tokens. There were so many things. We were one of the first Bitcoin derivatives on Ethereum mainnet, right? And we just never quite landed a product that could get to really solid product market fit. We're either just didn't quite make the right choices, or too decentralized, or whatever the issues were. And so that, as someone who's very competitive and likes to win, was just not satisfying to me, right? And so when we started to rethink how to rebuild Synthetix, it was like, okay, we need to build a perp DEX, and we need to go and go after this narrative. And so I've thrown everything into it. But the transition that I think we were in the midst of this cycle is the most important transition in the history of crypto. So if you go back, there's the, let's call it the prehistoric era of crypto, 2009 to 2011. In 2011, the first centralized exchanges emerge, and it's almost like multicellular life, right? They are so much more competitive and so much more adapted to their environment that they just outcompete everything. And all of the other organisms are just pushed to the side, and these multicellular centralized exchanges dominate, and they dominate until today. It's been a decade and a half of dominance, right? But this cycle, for the first time, even though we've been building DeFi for a long time, Ethereum is about being on chain, all of this work that a lot of people have put in, it has taken time because centralized exchanges are just that good at what they do. They're the most efficient cross-chain, multi-chain, multi-asset platforms ever. They just have a superpower, which is be completely centralized. And so what's happening today, I think, is that finally the transition away from centralized exchanges. I think we will move out of this era of centralized exchange dominance into people being on chain. But there are many, many things that need to come together for that to work, which is you need to be as good as a centralized exchange for all users, not for enthusiasts, but for all users. And that's what Infinex is trying to do. That was the thesis behind Infinex, is find a way to take on centralized exchanges by improving the user experience and getting it to a point where it's not just at the same level as a centralized exchange, but it significantly exceeds it because you have access to everything that happens on chain. And so I think by the time we get to the next cycle, and if you look at every centralized exchange, they all have a plan for how to become a hybrid on-chain, off-chain system. Every single one is working on this because they see it. And so I think that by the time we get to the next cycle, it will be the first cycle where on-chain platforms dominate and centralized exchanges start to fade into the background. It may be that the on-chain platforms are launched by what were formerly centralized exchanges or by companies that ran centralized exchanges. It might be that they're pure play platforms like Infinex. But I think that we will see the ascendancy of on-chain platforms and this super app thesis of give everyone access to every asset on every chain and every platform, every DeFi opportunity in a single application, and make it non-custodial, and you will win. and we finally are starting to see the first kind of glimmers of that, of this new era.
Yeah, I mean, like we can already see this shift happening. Like, obviously, we all know in recent days, but all it's been going on for months, really, if you look at it in a zoomed out perspective. Binance has been receiving a lot of criticism. And, there was that whole listings thing that everybody was talking about the past few days. But obviously, before that, they're clearly being challenged by Hyperliquid and reacting in their own way. But then, on the other hand, we have Coinbase, with Base and the new Base app, and it's like clearly aiming for this new everything app. So yeah, like I agree with you that writing is on the wall. I'm just curious, like, because Infinex compared to something like, the Base app tied to a Coinbase, like, how are you thinking about how to compete in this world where like distribution, I think will matter a lot. And yeah, so what are your thoughts on that?
I think if you look at the current landscape, the current environment, right? To use my evolutionary analogy, right? The dominant life form is the centralized exchange, but it's not like there's just one. Right. There are many species of centralized exchanges that are either, regional in the case of, Coinbase to some extent, being very focused on the US, being very dominant there, or they have some particular niche that they occupy in the environment, right? There isn't a single centralized exchange that dominates, even though Binance is obviously huge. But the 25th or even 50th centralized exchange is a very profitable business, right? There is a lot of opportunity for more than just a single winner in the crypto space, right? And this is in our current, still very nascent phase that we're in, where we have, let's say it's 10% adoption or something like that, or even 20% adoption or whatever in terms of holding crypto assets. So if we fast forward 10 years, 20 years, I don't think that we'll see a single application, because I think that's what, crypto applications is what we will eventually become. There won't be one crypto application. That would be crazy. In the same way that there's not one messaging app or not, one food delivery app. There's always going to be competition, and so our goal is ensure that we find the right niche where we can thrive and we can build distribution and a loyal user base, and we have the right kind of set of trade-offs for that class of user who wants to use something that feels like Infinex. And at the moment, that's very squarely aimed at people who are already on chain but are frustrated by the day-to-day frictions that they have in being on chain. They've overcome it and they've done it, and they have 8 wallets and they have all of this stuff. I mean, Monet is a great example, right? There's this Monet airdrop that's happening right now, and everyone is putting all of their wallets together. And in every single group that I'm in, there's this ongoing discussion of like, do I add all 50 of my wallets to the Monet airdrop, or do I just put 8 of them, or like, what's the optimal strategy? Which is crazy. Like the idea that you have 50 or 100 different accounts and you're trying to aggregate them. Like, we should have platforms, and Infinex is going to be that platform that stops you from needing to have this proliferation of addresses and managing gas, different wallets for different chains, etc. But be able to participate on chain. And so we think that there is a huge TAM, even in the existing, crypto kind of early adopter cohort, that already sees the benefit of a platform like Infinex. And that's before we've rolled out our extension, a mobile app, the ability to import your legacy wallets into Infinex. There's a bunch of features that are coming up in the next few months that we think will kind of solve this and just make it the most obvious place for you to do your crypto stuff if you're already on chain.
Yeah, honestly, the way you're talking, it reminds me of like, AOL was kind of like a handholdy way to get online in the early days of the internet. And it's like you are preparing for when people are ready to like graduate from AOL
Yeah, exactly
on
right.
chain.
Yeah,
Yeah.
exactly. There's people, and the thing is that um, it used to be so niche, right? People who were on Binance didn't know that Yams was going on, or Harvest Finance, or any of the yield farming stuff that was happening in DeFi summer. Today, I think everyone who's on Binance knows Hyperliquid exists. They might not necessarily feel comfortable going and trading on Hyperliquid, but they are not unaware of it. And so there is this kind of FOMO building and interest of, well, if I can just figure out how to do this thing, I can try Sui, or I can try, going to Solana and buying some meme coins, or whatever, and not waiting for a centralized exchange to list the asset before I can get exposure to it. And so making that easy for people, I think is a huge thing. But for what it's worth, we think the existing on-chain user base is so large, and there is a huge kind of benefit to tapping into that first, building that first wave, and then we can go, okay, centralized exchange users are looking for an alternative. We can be that credible alternative.
Okay. Yeah, that totally makes sense. All right, Kain. Well, it's always a pleasure chatting with you. Is there anything that we didn't talk about that you feel like we should?
I think we talked about the Synthetix trading competition, and for what it's worth, like, of all of the things that I've cooked up over the years, and there are many, this is the one that I'm maybe the most excited about. It's actually shocking to me that no one has really tried to do something like this before, and we have so many interesting people. I think just being able to see how someone like Jordy Alexander trades is going to be riveting for like the average person on the timeline. So I expect this to blow up and be all over the timeline for the next like 30 days while everyone is following along. We've got some really cool graphics that will show like P&L, like literally on an hour by hour basis of like who's winning. So it's going to be, we're working to make this like max entertaining, as entertaining as possible. So yeah, I would really encourage people to kind of tap into that and be ready when it kicks off next week.
How many players do you have?
So there are 50, call them celebrity traders, if you will, and then 50 people who earn slots either by depositing or had high volume on a previous exchange. So there's a combination of pro traders, celebrity traders, KOLs, influencers. So yeah, it's going to be quite funny.
And yeah, I mean, honestly, like it reminds me, yeah, just like a leaderboard on, like, I think, BetMax, and there's a bunch of these exchanges that had them. So
Yeah.
it's similar, or?
Yeah, similar. It's going to
Okay.
be literally like a leaderboard for that 30 days. We didn't ask you. We maybe should have asked you
Well,
to.
I'm not a trader.
That's the funny thing. It's actually, you don't necessarily need to be a trader, right? There's a couple of people who are not traders who are like, yeah, it's, because we give the margin to the people. So the goal is have the highest P&L at the end of the trading competition, but you don't take any personal risk. We give you the margin, and the winner wins $1 million. Which, as a trader, you go 1 in 100 shot of $1 million, like EV, 10 grand ish. But also, I'm the best trader, so really, it's more like 50 grand or 100 grand that I'm going to walk away with. So it was actually quite funny how easy it was to get most of the people involved. They were like, "Well, I'll definitely win, so yeah, of course I'll play."
Yeah, I feel like I had one more question about that, but it fell out of my head.
You were
Okay,
thinking about
so
whether you could win the competition, weren't you? You're like, I could maybe do this.
no, there's pretty much no way unless I don't know, I'd have to just get super lucky. Oh, I remember. Sorry, I remember. So I don't know if I fully understand. Like, so they're not putting in their own money. You
Correct.
oh, got it.
We give the margin, yeah. So what we're doing is we have a delegated trading system. So we are going to get an address from them and give that address delegation power over a margin account. So they can't withdraw the margin; they can just trade it. So if they lose it, that's fine. We've got an interesting little element where every day there's going to be a vote on Twitter, or on X, I should say, for which of the liquidated traders should get brought back in. And so that alone is going to be quite entertaining to see, like, if someone gets liquidated, can they rally the troops and get voted back in?
Nice. Honestly, now that I think about it, this reminds me of the whole James Wynn thing, but like in reverse.
Yeah. Yeah,
So,
we tried to get James Wynn. I don't know exactly what happened there, but yeah, we thought he would have been pretty entertaining, but we couldn't quite hit. There are a few people that we couldn't quite get over the line, but I've got 48 hours to try and get them over the line now.
Okay. Well, it sounds super fun. And yeah, we'll have to see what happens. I definitely will be watching this on the timeline. And thank you again so much for coming on the show.
Amazing. Thanks for having me.
Unchained is produced by Laura Shin with help from Matt Pilchard, Juan Aranovich, Margaret Curia, and Pam Majumdar. Thanks for listening.